Okay, real talk for a sec, right? Applying for a business loan, kind of scary, right? It's like, what are they even looking for? Feels like some secret banker language we're supposed to just know.
I can see that.
But good news today, we're going to decode it. We're doing a deep dive into this awesome podcast episode. It's called What the Banks Aren't Telling You About Business Loans.
Love that title. Gets right to the point.
Right. So we're going to uncover all those little things that banks are actually looking at, but they don't always tell you.
Exactly.
And then, most importantly, we're going to figure out how to use all this to our advantage, right? Like how to actually get that loan approved.
That's the goal, right? To make this actionable.
Exactly. So we all know, like, credit scores, revenue, that's important, obviously.
Basics, yeah.
But this episode got into stuff I'd never even thought of, like how old your business is. That's huge for banks.
Makes sense, though. Age, it's like a stability indicator. And banks, they love stability. Usually they want to see at least 2 years, in business.
Right, right. But here's the thing that I thought was super interesting. Let's say your current business is pretty new, right?
Okay.
But you've had other businesses before and they were successful.
Oh, I see where you're going.
The podcast said that totally matters. Like, they might not say it outright, but banks look at your whole entrepreneurial journey.
Yeah. So many people think they got to hide their past ventures, but it's the opposite. Show it off.
Exactly.
It's proof you can do it. It's a track record. Lenders eat that up. Makes you way more credible.
Love it. Now, there was this thing they talked about, industry concentration. Sounded kind of scary at first.
It's similar than it sounds, honestly. Basically, banks track how much they're lending to different types of businesses.
Got it.
So, say a bank's already given a bunch of loans to restaurants in one area, right?
Okay.
They might not want to loan to another restaurant, even if it's got great numbers, just because they've hit their limit for that industry.
Oh, so it's not even about the restaurant itself. It's the bank's own, like, risk thing.
Exactly. They're trying to spread out their loans, different industries. So if one does bad, it doesn't hurt them too much.
That makes sense. Diversify, like, investments.
Right. Now, flip that around. A bookstore applies. Same financials as that restaurant. The bank might be all over it because it adds variety.
Ah, so it's like finding the right bank for your type of business, not just any bank.
Bingo. Research is key. What gets a no at one place could be a yes somewhere else, just because of what they're already lending to.
Okay, that's super helpful. And speaking of things people might not realize are important, let's talk cash flow. This podcast host, he was like, cash flow is king, more than total revenue even.
100%. I can't tell you how many times I've seen this. Profitable businesses get rejected because their cash flow is all over the place.
Seriously.
Dead serious. So what do banks look at? They go deep into those bank statements.
Makes sense.
Average daily balance, overdrafts, how often those happen, how big they are. When do your payments come in? Is it regular? Is it seasonal?
Wow, this is making me think about my own business now. Like, I kind of let my balance get low before I make deposits. Could that be a bad look?
It could. Even simple things like keeping a good buffer above a certain amount, it shows you're on top of it.
Right, you're not panicking about every little expense.
Exactly. Proactive cash management, that's what lenders want to see. Not just, oh, I didn't overdraft, Sue.
So we've got age, we've got industry, cash flow is super important. What other secrets did they spill?
This next one's big. He called it the documentation game changer, and it's all about giving them more than they ask for.
Ooh, I like that. Playing offense, not defense.
Exactly. They have their checklist, right? But there's stuff that's not required, but it can make you look so much stronger.
Like what? Give us the goods.
Okay, for example, a detailed accounts receivable aging report.
Now, for those who don't speak accountant, what is that?
Basically, it shows who owes you money and how long they've been owing it.
Okay, so if I've got people who are really late paying me, that's not good.
The bank sees that and thinks, maybe their cash flow isn't so great after all.
Right, makes sense.
But if you give them that report up front, you're being transparent, proactive.
You're in control.
Yes. Another one, customer concentration analysis. If you rely on a few big clients, this is huge.
I can see that. What if they leave?
Boom, revenue's gone. But if you show the bank you've thought about that, you have a plan.
It shows you're not just hoping for the best.
Exactly. I'm seeing a theme here. Anticipate their worries. Answer them before they ask.
Love it. What else?
Last one, forward-looking projections. Not just past performance, but where you're going, market analysis, the whole 9 yards.
So like, hey, I'm not just riding this wave, I'm thinking ahead, I'm adapting.
That's what they want to hear. Strategic thinking, long-term success. Even if you don't have all these fancy documents,
Yeah, what if we're just starting out?
even creating them shows you're serious. You've thought it through. Like a job interview, showing up with extra work samples.
It's that extra mile.
Exactly. Minimum requirements, those are for amateurs.
Okay, so much good stuff here, seriously. It's like, these secrets are hidden in plain sight, right?
Yeah, we're just getting started. In the next part, we'll talk about actionable steps you can take, like right now, to get that loan profile looking sharp.
All right, welcome back. So last time, we really dug into how banks think about loans, right? All those little things they don't always tell you.
Right, it's like the behind-the-scenes lick.
Exactly. But knowing that stuff is only half the battle. Now we got to figure out how to actually use it to our advantage.
Totally. Information's great, but we got to make it actionable.
That's what I'm talking about. So this podcast episode had a whole section on what they called actionable steps. And the first one was building a relationship with your bank.
Oh, yeah, that's huge. A lot of people think they could just, like, show up when they need money and it'll be fine.
Right. Like, hey, nice to meet you. Can I have a few $100,000?
Haha, yeah, no. Doesn't work that way. You got to build that trust way before you need the loan. The host recommended, like, 6 to 12 months ahead of time.
Wow, so no last-minute scrambling.
Nope. Choose the right bank for you, open an account, keep some money in there, and talk to your account manager. Actually get to know them.
I can see how that would help. It's like they know you, they can vouch for you when it's loan time.
Totally. I had this kind a while back. Good financials, good plan, but they kept getting rejected. Turns out their account manager was new, didn't really get their industry.
Oh, that's rough.
Yeah, we switched them to a bank that specialized in what they did. Boom, loan approved in a few weeks.
Wow, night and day. Okay, so we got our account, we're buddy-buddy with the manager. What's next?
Strategic cash management. Remember how we talked about cash flow? Super important.
Yeah, that was a big one.
They had this specific tip. I loved it. Keep a minimum balance of at least 20% of what you want to borrow.
Oh, wow. So if you're asking for 100,000, you got to have 20 grand just sitting there.
It seems like a lot, but shows you're responsible, stable. You can handle money. Lenders eat that up.
Right. It's like you're not sweating every dollar. You've got a cushion.
Exactly. It's not just about not going negative. It's about showing you're on top of your game.
Makes you look way less risky.
100%. So we've built that relationship. Cash flow's looking good. What's the final step?
Hit me with it.
Optimize that credit profile. Now, paying your bills on time, that's obvious, right?
Yeah, credit score 101.
But there's more to it than that, like credit utilization. How much of your available credit are you actually using?
Okay, and we want to keep that low, right?
As low as possible. They said aim for under 30% on all your business credit.
So if my credit card limit's 10 grand, I shouldn't have more than 3 grand balance.
Perfect example. High utilization screams risky. Keep it low. You look responsible, like you don't need to borrow.
Makes sense. Like, I'm good. I just need a little boost to take things to the next level.
Exactly. They also talked about having at least 3 trade lines.
Okay, gotta be honest. Not sure what that means.
Think of it like credit accounts, but with vendors, suppliers. It shows you have history paying other businesses on time.
Ah, so it's like a good reputation in the business world.
Exactly. Lenders love to see that. And this whole thing, right? Optimizing your credit, it's good for you anyway, not just for loans.
Totally. It's like building a solid foundation for your business no matter what.
Couldn't have said it better myself.
Yeah.
So we've talked about internal stuff, right? Things we can control ourselves. But what about external help?
Yeah, any resources we can tap into?
3 big ones the podcast mentioned, and these are often overlooked, which is crazy because they could be so helpful.
Okay, lay it on me. I'm ready for these secret weapons.
Number 1, SCORE. Stands for Service Corps of Retired Executives.
Catchy!
Right? Basically, it's a network of mentors. Lots of them have banking experience.
So they've been there, done that.
Exactly. They'll help you refine your business plan, polish your financials, really understand the loan process. And get this, it's free.
Free, as in $0.
Free 99. Can't beat that.
Amazing. Okay, what's number 2?
Small business development centers, FBDCs, they're all over the place, usually tied to universities or like economic development groups.
I've heard of those, but I always thought they were more for like marketing, operations stuff.
They do that too, but here's the kicker. A lot of them have former bank underwriters on staff.
Wait, so people who used to decide on loans.
The very same. They know what banks are looking for, how to present your stuff the right way. They can even spot red flags in your application.
That's like the ultimate cheat code.
Right. And then the third resource, this one's all about getting specific. Industry trade associations.
Right, got to niche down.
Every industry has its own quirks, right? These associations know all of them.
So like, if I'm a baker, I should talk to a baking association, not just any business group.
Bingo. They often have special lending programs, relationships with banks that love to work with bakeries.
It's all about finding those connections, the people who already get your business.
Makes you way more attractive to lenders. So you've done all this, right? Your numbers are good. You've got your bank on your side. You've talked to the experts. Is there anything else we could do to increase our odds?
Yeah, what's the secret sauce here?
This last one's sneaky, and a lot of people miss it. Timing.
Timing.
Banks aren't just sitting there waiting for loan applications. They have their own cycles, quotas, just like any business.
Ooh, interesting. So it's not just when I'm ready, it's when the bank's ready.
Think of it like retail stores. They have sales goals, right? Banks have lending goals.
Okay, I'm following you.
So if you can time it right, you might have a better chance. Like early in their fiscal quarter, they might be more eager to lend.
It's like finding that sweet spot where your needs and their goals line up.
Exactly. Strategic thinking, all the way. Okay, we've covered a lot of ground here.
My head's spinning, but in a good way.
We went from loans are scary to I got this. But there's one last bit of wisdom from this podcast, and it's a big mindset shift.
Okay, I'm ready.
It's not just about getting approved, it's about becoming the kind of borrower banks want to approve.
Ooh, now we're talking. All right, final part of our deep dive. My man, we've been through all. But last time you left us with this idea, right? And don't just try to get approved, become the borrower they want to approve. That's powerful stuff.
It is. It's like instead of jumping over their hurdles, you're making them see, hey, I'm the prize here.
Right. You're not begging. You're like, invest in me. This is going to be good.
Exactly. And that's where everything we've talked about comes together. The strong bank relationship, managing your cash well, good credit. It all adds up to like a track record of this person's got it figured out.
It's like a resume, but for money, right?
Yeah. And just like a good resume gets you better job offers, a good financial profile gets you better loan terms.
That's what I'm talking about. And there was this line in the podcast really stuck with me. It said, don't just get approved, negotiate the best terms for you.
So important. It's not just about the yes, it's about the right yes. The loan that helps you grow without crushing you with payments.
You got to advocate for yourself, right?
100%. And now we're not going in blind. We know what they're looking for, so we can position ourselves as the ideal borrower.
Man, I'm feeling way more confident about this whole thing now. It's not about, like, pleading for money. It's showcasing what you've built.
That's the spirit. And that confidence, it'll help you negotiate better, too.
So, wrapping up, what's the one thing you want people to remember?
Knowledge is only good if you use it. Don't just listen to us. Take action. Go talk to those experts. Build those good habits. Make yourself the borrower banks dream of.
Love it. It's like you're in control of your financial destiny.
You are. And remember, getting the loan's not the end goal. It's about what you do with it. Grow your business. Make those dreams happen.
Well said. All right, I think we officially cracked the code on business loans, right?
We did good.
But if you're like, wait, what about other ways to get funding? We got you covered. Next time on the Deep Dive, we're exploring all those alternative options. Venture capital, crowdfunding, angel investors. It's a whole other world out there.
Can't wait.
Until then, keep learning, keep growing, and keep chasing those goals. Thanks for joining us on the Deep Dive.